Welcome in this video. Where can Zbcn coin price go in a short time? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking closely at the chart, it is clear that the price has formed a short-term downtrend structure in its recent activity. This type of structure usually indicates that the market has been in a downward trend for a certain period of time, with the price continually making lower highs and lows due to profit realizations or selling pressure from traders. During the formation of this trend, each uptrend attempt is below the previous high, confirming that the downtrend is still technically valid. This downtrend line has become a prominent resistance line that the price has repeatedly touched and failed to break through. This means that every time the price made an upward move, it hit this trend line and bounced back, continuing its decline. Therefore, this trend line is not only a technical boundary, but also a psychological threshold for market participants. Because as long as this line is not broken, traders tend to think that the downtrend is still in progress, resulting in limited upside. However, there is a widely known rule in technical analysis. Every downtrend is there to be broken one day. Therefore, the possibility that this short-term downtrend may be nearing its end should be considered. The price is approaching this line once again, and this time a breakout on volume may be on the agenda. Especially if the price breaks this line with a strong candle and increased trading volume, this breakout could be interpreted as a trend reversal signal. After such breakouts, the price usually retests back to the area it broke, and may then start a strong upward move. Also, one of the most common patterns after such falling trend breaks is the falling wedge structure. If this short-term trend line also lies within a wedge pattern, then the breakout of the pattern is perceived as a positive signal by both technical analysts and algorithmic systems, and buy orders may increase. This will pave the way for the price to gain momentum and rise. Another point to consider is whether the price can continue upwards after the breakout. Because breakouts alone are not always enough. It is important that this breakout is sustainable. For this, the price needs to hold above the level it broke and create a bullish structure by making new highs. In other words, the new post-breakout structure should be supported by higher lows and higher highs, confirming the start of the uptrend. In conclusion, this short-term downtrend structure is one of the first technical hurdles to overcome. If the price breaks this structure to the upside, both a short-term relief and the start of a potential bullish wave could be possible. Therefore, it is of great importance to carefully monitor whether this trend line is broken or not. If this level is crossed to the upside, it would be a technically positive signal, and investors' confidence would be boosted, which could lead the price to climb to higher levels. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. When we take a broader perspective on the chart, we can clearly observe that the price movement has reached a very critical stage. In particular, the bullish order block located just below the current price stands out as an extremely important support zone in technical analysis. This area, which previously saw high volume buying and strong upward reactions, is closely monitored by investors who shape their positions accordingly. Bullish order blocks typically represent regions where large institutional investors have taken positions and where buyers with the power to influence the market have executed trades. Price behavior at these levels provides important clues about how the market may evolve in the future. Especially as the price approaches this order block, it may once again encounter buying pressure, just as it did in the past, potentially reversing its direction upward before breaking down further. Most investors and traders interested in technical analysis define such areas as demand zones and interpret pullbacks to these zones as potential buying opportunities. Examining the current price action, it is evident that the price is gradually approaching this critical area. The volume profile during this approach should also be carefully analyzed, as a decrease in volume during the decline may indicate weakening selling pressure and a potential signal for a reversal. Likewise, if the price touches this bullish order block and forms a strong candlestick pattern, it would confirm that buyers are stepping in decisively at this level, signaling the beginning of an upward move. In such a case, the potential for the price to reach higher levels in the medium to long term increases significantly. Furthermore, looking back at how the price has behaved in this zone previously, we can see that this level has worked multiple times in the past and led to sharp upward moves. In technical analysis, zones that have worked well in the past are likely to produce similar reactions in the future. This highlights that the order block is not just a momentary support, but also a psychological threshold. The perception of market participants toward this level further emphasizes its strategic importance. If the price reaches this area and begins to consolidate, That would also be an interesting detail. Strong support levels are typically places where the price moves sideways for a period before making a sharp directional move. For short-term traders in particular, the reactions from this area can provide key signals for a potential breakout or bounce. If the price consolidates here and then breaks upward with momentum, it would indicate that the bullish order block is holding and that the market is preparing for a new uptrend. On the other hand, if the price reaches this area but fails to hold and breaks down, it would suggest that the buying pressure in this region is insufficient. In this scenario, the price risks pulling back toward the next lower support level. However, it is also a known fact that such strong regions are not easily broken. These types of order blocks usually contain the liquidity needed to push the price upward. For this reason, many investors place their stop losses slightly below these zones, allowing the price some room to test the area. Lastly, developments in this zone will be decisive not only from a technical analysis perspective, but also in terms of overall market sentiment. The price reaction at these levels clearly reveals how market participants are positioning themselves in light of current macroeconomic conditions and general trend expectations. Therefore, if the price touches this zone in the coming days, it will be important to consider not only technical signals, but also news flow, global risk appetite, and market sentiment when interpreting the situation. When we take a deeper look at the chart, we can clearly see the traces of a long-standing suppressive downtrend in the RSI indicator. This trend was marked by lower highs on each attempt by the RSI, indicating a weakness that paralleled the downward tendency in price. However, with the recent activity, this downward trend now appears to have finally come to an end. The RSI has broken above this trend line with an upward move. Moreover, since this breakout occurred even before the price movement, the RSI has provided an early signal of a potential upward move from a technical analysis standpoint. Typically, trend breakouts in the RSI offer clues about future price action. As this indicator provides key insights into price momentum, bullish breakouts in the RSI often precede similar upward breakouts in price. In the current scenario, this is exactly what is happening. While the price is still struggling to break through a critical resistance level, the RSI has already surpassed its corresponding resistance and has started to move higher. This suggests that internal market dynamics are gaining strength, buyers are starting to take control of momentum, and the currently stagnant or pressured price movement may soon resolve into an upward breakout. This early reaction in the RSI generally acts as a leading indicator and is taken seriously in technical analysis. Because when the RSI responds before the price does, it often raises buying expectations among investors and lays the groundwork for an upward price move. In summary, the upward breakout of this descending trend in the RSI reveals that the market is gaining strength and that selling pressure is gradually diminishing. Such technical structures often signal that price is likely to make a similar move. Therefore, it seems that the RSI has already indicated that the price is preparing for an upward move. If this positive momentum is maintained and the price follows suit with an upward breakout, it will create a strong technical foundation for the beginning of a new uptrend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.